Would you give a random stranger $1 if they told you that they could turn that dollar into, well, negative dollars? This is why I don't play around with companies that consistently post negative earnings. That's going to be the topic today. Companies that are professional money losers. And obviously I have a couple here we're going to go into, including Uber, Slack, Tesla, and Tilray. All of these are very hyped stocks right now. So I think it's very worth looking. Today, this one's going to be called 4 Stocks Not to Touch with a 10-Foot Pole. Maybe that's not the actual thing I'm going to call it. But regardless, we're going to get right into it. 2 of these are recent IPOs, both Uber and Slack. Needless to say, if we look, just take a look. Could you take a look for me? Obviously, this is as max as we can get anyways, because we only have since July, but needless to say, so we opened somewhere around $44 a share at IPO, or the initial public, the initial public offering. And guess what? You see that, look at that. Just to make it look good for you. Looks awful, in case you were curious. I want to go back now so we can forget about this chart ever existed. Apparently we can't, so click back on that. So Uber, money loser, professional money loser. Obviously, they've had enough time to report 2 earnings. One, can't make this stuff up. They beat their earnings estimate. Oh, what'd they get? Yeah, just negative $2.23 per share. Nothing too bad. Only lost millions of dollars. And then, yikes! Most recently, oh my God! Just only negative $4.72 per share. Don't worry, they'll grow out of it. That's awful. At these levels, I would not touch this company. Ugh, that's just ugly right there. Over on your right hand side, that's just ugly. Obviously, there's increasing revenues here, but what's increasing revenues but losing money on every transaction? And that's the thing with Uber. They're always going to be losing money on every transaction for quite a while until they finally figure out a different business model. As far as what they're going to do, whether it be jacking up prices, paying employees, I guess I would say. It's hard to call them employees, but paying them less. What are they going to do to actually start making money? Obviously, now they have Uber Eats as well, which Uber Eats does nothing but lose money. What a shocker. Uber is not something I would play around with, and there's a reason why it's been hammered since IPO. Awful. Slack in the news, obviously because it was exactly $30 per share. That's why it's in the news. No, this one in the news because they just reported earnings the other day, a couple days ago, and yikes. Let me just say, just look at the week chart. I mean, you could see what happened during that earnings. There's no denying it. Obviously, we recovered slightly, but we'll go to our max chart again since July, and what a shocker. Yet again, below IPO value initially. It's been pretty steady, but still below IPO value, which to that means don't play around with this stock. They posted 1 quarter of earnings where they only posted a negative 14 cents per share. Okay, that's fine. Negative 14 is not awful. They're not losing that much money. But here's the thing about Slack. Microsoft's beating them out, and this is a fact. They aren't really competition to Microsoft, in my opinion, and I don't think Slack is necessarily going to have a chance to fight up against them. They could try. No guarantees, though. I don't think Slack is worth touching at all, especially at current values. I can only see it going further down. Wow. Tesla. People are going to disagree with this one. That one-day chart makes it look too good. Can we go to a 5-year chart? Yeah, that's right. I'm bringing up the 5-year chart. So since 2014, this stock has gained no value. Literally no value in 5 years. If you count these peaks, maybe if you sold during that, but if you've held the stock for 5 full years, literally no value. You've actually lost value over the past 5 years. That's ugly, in my opinion. Very, very ugly. I mean, there's no denying this stock is extremely bloated. Way overpriced. Some people might find there's value because in the future, Tesla could be a company that makes quite a lot of money. But there's also a chance they aren't. Let's look at these earnings to see why I don't like this company. Oh, gosh. So for the year to date, negative $3.52 per share. Wow. Awful. If we look at earnings history, quarterly, nothing but L's, except for their surprise quarter, very surprise quarter, 2 quarters ago where they made money. Look at that. But then, other than that, look at this, L. And it's an L, another L. $2.09 per share? Oh my gosh, that's awful. I mean, that's just absolutely awful. Ugh. That's what I call an ugly company. Could definitely amount to something in the future, but to me, ugly company. I mean, lost $1.12 most recently. They're making improvements, but my gosh, is it worth it? This stock is just not worth what it's valued at right now, and this is just an absolute fact. Maybe in the future it could be, but right now it's just not worth it, and I don't know if it's necessarily going to go down. Tesla stock has always been just sitting right around that $200 range for a long time now. No one is really buying and selling that much significantly to actually cause a super trend like that, so I just don't play around with this. Maybe in the future when they make positive earnings, if they do. But right now, they're finally getting to a point where they're making money on some of their vehicles, where previously they were selling vehicles just to sell the vehicles, even though they were losing money on every vehicle. But now they have Tesla insurance. Could be a factor and give them some money for no cost. So that could be an effort for them to increase it. Finally, we're going to go to Tilray. You can't go and talk about stocks not to touch without talking about weed stocks. I'm going to pull up a 6-month chart, and I don't want you to feel awful. Okay? Now I'm going to pull the 1-year chart up. Oh, gosh. Tilray. We don't care about 5-year. Tilray stock. Absolutely disgusting. Right in the weed stock hype. And you can see, yikes. Tilray was somewhere up around $150 a share. $150 a share. But why? Just because people were hyped about legalization of marijuana. And guess what? Once reality set in that this company is not really significantly growing and it's losing money on every transaction, guess what happens? You go from $150 to now down to $32 a share. It makes me hurt looking at that. Gosh darn, I hate it. Let's look at these earnings. Let's look at these earnings. Why I wouldn't touch this stock. That's right. I said it. I wouldn't touch the stock. So we're going to look for this quarter out. Negative 20 cents a share for earnings. Negative 31 cents a share. Negative 32 cents a share. Then negative 36 cents a share in the most recent quarter. So what do we see here? The more it grows revenue, the more money it loses? Yeah. Sounds about right. That's not a sustainable business model. You got to make money. There's got to be some sort of profit margin there, but there clearly is not. I'd just stay out of wheat stocks in general if I were you. I know a lot of people probably made a lot of money off wheat stocks, but I would never invest in wheat stocks. There's no value in them right now, really, until we get full legalization and we actually know the scope of how it's going to be. A lot of times these people who actually want this Mary Jane, let's say, they're going to purchase it on the street for cheaper than it's going to be there, because on the street it's not taxed, and the marijuana tax is insane. So please stay away from all of these stocks. Please do. Wait until they start making some positive earnings. Ugh.